So as a mortgage broker, looking at interest rates, house prices, and the future of the economy is something that we do on a day-to-day basis. But there's two questions that always crop up from clients, ones that we don't have the answers to, because quite frankly, we just don't have a crystal ball. Those two questions are what's going to happen with interest rates and what's going to happen with house prices. Well, yesterday I was reading a report, which I'm going to share with you in a second, that might answer these questions. And I'd love to hear your thoughts on it to see if you think the things that are mentioned in this report are correct. Now, if you're watching this on YouTube, there will be a link to the report in the video note. So please do feel free to click on the link and take a look at the report yourself, because I'm only going to cover it very briefly. So if we take a look on screen, this report was from Savills, and they've made a revised publication on their house price forecasts for the period covering 2024 to 2028. Let's have a look at the headline. Falls in the cost of debt and an improving economic outlook have created more capacity for house price growth. I would agree with that statement. Absolutely. No problem whatsoever. Key takeaways. The UK housing market has performed more strongly than many anticipated so far this year, with average values increasing by 1.1%. That was from the Nationwide, by the way. So take that with a pinch of salt because it's only covering Nationwide's mortgage clients. We've also got the Halifax House Price Index and, of course, the more important Land Registry. The outlook for 2024 has improved since our last November forecast, primarily thanks to falls in the cost of mortgage debt. We now expect UK house prices to rise 2.5% this year. However, the market remains sensitive to short-term fluctuations in cost of debt and political uncertainty in the run-up to a general election. Absolutely agree with that point. An improving economic performance combined with steady cuts to the base rate will open up more capacity for growth from 2025. And I think I would agree with that statement as well. So at the beginning of November last, we forecast that house prices would fall by an average of 3% in 2024 and that housing transactions would remain at around 1 million for the year. At that time, 75% loan to value mortgage from Nationwide on a 2-year fix cost 5.34% and mortgage approval were down below 50,000 per month. One of the most reliable lead indicators of house price movements, the reading for new buyer inquiries in the RICS Housing Market Survey, was still in negative territory, with a net balance of 23% of respondents saying they were still falling in October. Yet, the average UK house price rose by a net figure of 1.1% in the first 3 months of the year, according to Nationwide. That brought annual house price growth to 1.6% at the end of March. Furthermore, monthly mortgage approvals in February rose above 60,000 for the first time since September 22, and the RICS reading for new buyer inquiries moved back into positive territory. And it then goes on to say, this recovery has primarily been underpinned by an easing of mortgage rate. A highly competitive mortgage market means lenders have fairly aggressive priced in the prospect of cuts in bank base rate. As a result, while the bank base rate remains at 5.25%, the cost of the same 2-year fixed Nationwide mortgage now stands at 4.84, while a 5-year fix currently carries an interest rate of 4.5. And it goes on to say, not only are fixed rate mortgage costs lower than we anticipated at this stage, but they have also been much less volatile. And this, combined with a slightly improved outlook for economic growth, has given buyers more confidence. So, yes, these comments are true for what we were seeing at the start of the year, but over the last few weeks, we have seen very volatile swap rate, which has had a massive impact on lender pricing, meaning that the cost of borrowing has gone up. Whilst we've had lots of mortgage inquiries, the actual number of those turning into actual transactions has dropped, and so I'm not sure I completely agree with the statements that they're making. But let's carry on and see. Because they say, however, we aren't getting carried away. Ongoing uncertainty around the pace of future base rate cuts, a relatively weak outlook for economic growth in 2024, and the potential for a general election to pause the recovery means our expectation for prices this year has gone from low single-digit house price falls to a low single-digit increase. So what do they think is going to happen to house prices in 2024? So the average UK house price in 2024 is expected to grow by 2.5%, 3.5% in 2025, and as you can see, 26, 27, and 28 all showing positive growth. So over the next 4 years, they're expecting property prices to grow from today by 21.6%. Wow, bold statement. And here's the bit that really interests me, what they think is going to happen to the Bank of England base rate. So by the end of this year, they think it could be 4.5%, very possibly could be correct. By 2025, 3.5%. Again, I feel that that may well be correct. But of course, nobody actually knows, not even the Bank of England at this stage. 2026, down to 2.5%, really? And then 27 and 28 at 2%. I'm honestly not sure that that's absolutely correct. I can't ever see, personally, the cost of borrowing getting back to those levels. I think 2025's figure at 3.5% is where we might find the base rate settling. But let's not forget, the long-term average of base rate is even higher than that. So I don't know. I'm not entirely sure that I agree with these numbers. But of course, we will keep monitoring things and we will let you know. And if I remember, I'll try and do an updated version of this in a year's time. Let's just carry on looking through the report. We're increasingly confident that house price growth will be in positive territory at the end of 2024, but we expect price rises this year to be contained to 2.5%. This reflects the fact that forward indicators from the RIC survey have become more positive over the last 6 months. The net balance of opinion for new buyer inquiries has shifted from -23 in October to +8 in March 2024. Surveyors' price expectations have followed that trend, but they still remain relatively cautious. And then we've got this graph looking at the activity for both buyers and sellers. And then further down, they take a look at the 3-month compound swap rate, which I covered in a video yesterday. But let's look at the longer term view. The economic fundamentals that we expect to govern the market in the medium term have slightly improved. Oxford Economics forecast growth for GDP over the next 5 years has increased from 7.2% to 8.9%, and wage growth from 15.8 to 16.4. These factors, along with steady cuts to the base rate that are forecast to begin in the second half of 2024, will combine to produce a progressive restoration of buying power, opening up more capacity for house price growth. And that's true, shifting from a buyer's market to a seller's market. Our 5-year forecast has therefore been nudged from 17.9 to 21.6% for house prices. The distribution of growth is also now expected to be slightly more even over the 5-year period. A strong economic performance in 25 and 26 will support buyer sentiment. But with the previously expected falls at the start of our forecast period, affordability constraints will become a factor earlier than we had previously anticipated, particularly in the already stretched market of London and the South East. The report then does go on to show you regional house price forecasts, but I'll let you take a look at this report in more depth. So like I said, if you're watching this on YouTube, do follow the link to the video. It is in the show notes. But what are your thoughts? How are you finding the market if you're out there looking for property right now? Do you agree with where the base rate is going to settle and the house price increases that they're suggesting? I'm not entirely sure I agree with all of the report. Some things I agree with, some things I don't. But that's just my opinion. I'd love to know yours. So please do share them in the comments below. Take care.